Welcome, everyone. Thank you very much for joining us for this Sifted Talk today on the Post-PMF playbook, how startups plan their next move. I am Martin Coulter. I'm the news editor here at Sifted. I'll be moderating today. The point of this panel is around how startups that have found their product market fit are entering an exciting phase of growth. It's about the choices made around go-to-market, monetization, and how business design can set the stage for their long-term success. So we've got an excellent set of panelists here today who I'm going to let introduce themselves in just a second. Just so you're aware, we also have a Q&A function, which I think you'll be able to see at the bottom of your screens. So as the conversation gets underway, please feel welcome to drop any questions you have in there along the way, and I will try and get to them as best I can. Maybe to start off with, Helen, would you like to introduce yourself?
Yeah, sure. Well, hi everyone. Thank you so much for joining us. My name is Helen. I'm a product marketer at Stripe. I specifically work on our usage-based billing product. So, in my day-to-day, we work with a lot of users from AI native companies to SaaS that's like transforming within this AI era. And they talk to us a lot about how they think about pricing and how it's been so different now that many AI products are really adding that variable cost component in terms of operations. And also just working and evolving in this market that's moving faster than anything that we've seen before. So I'm really excited to share what I've learned from working from many of these leading startups, especially within the realm of how they're managing pricing and thinking about AI monetization.
Amazing. Thank you very much. We also have Henry here from Dawn Capital.
Hello, I'm Henry, a partner at Dawn. We're a London-based VC firm investing at what we would call the scale-up phase. So ideally, companies that have solved this magical product market fit problem and are now thinking about scaling up go-to-market. Of course, the reality is much messier and similar to Helen, it's a fast-changing environment. So very happy to share how we're looking at it from our investor side.
Amazing. Thank you very much. And then we have two representatives from the startup side. I think if Shreman from Granola could introduce yourself first.
Hi, everyone. Great to meet you all. I'm Shreman, head of business at Granola. Granola is the AI-powered notepad and meeting assistant. I was Granola's first go-to-market hire, so covered our first enterprise contracts, and now focus on product and startup partnerships.
Awesome. Thank you very much. And last but not least, we have Dan, co-founder at Dwelly.
Thank you. Privilege to be here. So one of the co-founders of Dwelly. I think that we were one of the first ones effectively kind of inventing and incubating the thesis of AI roll-ups kind of in the current world. And I think that hopefully kind of the relevance for this session is not a single VC conversation that we had wasn't, I think, ending up asking us, guys, but like if the services industry is so outdated and kind of technology and especially AI can improve it so much, why don't you just go and sell this technology kind of to the companies rather than buying them out and transforming them inside out? So kind of I do hope that some of our insights would be relevant for the conversation that we're going to have.
Great. Thank you very much.
Because selling is hard, but I think that we'll uncover that as we
Absolutely. Dan, I was going to come to you first, actually, because I saw a LinkedIn post from you advertising this talk in which I think you described finding the product market fit as a magical feeling. So I wanted, maybe, could you answer what that moment is like and how do you know when you're there, if we can define our terms a little bit?
To be honest, I don't know, because I think that kind of product market fit is probably kind of the type of thing that you kind of what when you feel it, right? And I think if you keep asking, is it there already? Is it there already? I think that the answer is simple. Then it's not there yet, because I think that once it hits, you know it. But like, to be honest, I think that jokes aside, in my kind of simplistic view of the world, I think that there are kind of two types of founders out there, and I think that we're briefly chatting about that. I think that there are the type of people that kind of find some pain or have their personal pain or something, and then they think about like how the current world, would it be the operational kind of processes or the product kind of might potentially address these problems and kind of go and try to invent those. I think that this is camp number one. And I think camp number two is like the people that kind of take what already exists out there with like pretty clear kind of business problem, business need and everything, but then they feel an opportunity with the current kind of existing technologies to make the same but like 10x better version of that. And kind of I think as much as I want to dream of myself to be in the first camp, I think that I fail miserably to be there, to be honest, because I think that most of the businesses that kind of I was part of historically, I think being rather kind of in the second camp, would it be kind of Get, the kind of European analog of Uber effectively, or kind of Dwelly in that regard as well, because like effectively taking already existing huge industries and then just like how can we make them 10x better with existing technologies. So I think that do you feel product market fit or not? Maybe kind of Granola guys would know better. But this is the moment when you just feel that you know it's there, because I think that it's whenever the overarching customers' feedback is the guys, I love it, I need it, right? And then it's just the question of like how big is your segment of customers that actually do love what you've built.
Great, thank you. I wonder either Helen or Henry, obviously you work with lots of B2B, smaller B2B businesses in different capacity, maybe either investing or advising. Do either of you have a take on when, how we're defining product market fit and when it has been found? Helen, I don't know if you want to jump in there.
A lot of the companies that we work with are still kind of like on this PMF treadmill. And a lot of them are still like looking to build the next thing to like increase their moat. I think ultimately a lot of it comes down to like listening to user signals and understanding what those user needs are. Working on the billing side, especially in terms of like usage-based billing, like a big part is metering, right? Like you kind of need to track those usage patterns in order to like charge on top of it. But like other than that pricing piece, because you're metering all of this usage, what our users are actually doing is also collecting data on how their end users are using their products. And what we've found that is that data actually becomes very powerful because it objectively is telling our users like what their customers care about and where they're actually getting value. Based on like the actual action, right? So when they're looking across all of these dimensions in terms of the frequency of usage, where they're actually like engaging with the most, they end up finding like what features are driving like the most sticky repeated usage. They see where users might be hitting ceilings. And these are all things that they kind of use to like bring back to their product development. And I think that they're using a lot of this data to refine like understand where users are actually getting value from and then refining their PMF over time.
Sure. And so, Henry, from the investor perspective, I suppose I'm wondering, are there any times, there are ever times where a company may think they found a product market fit and maybe you're inclined to disagree, or, how do you...
Yeah, like I think everything that's been said is very valid. From my perspective, there's a difference between having product market fit, in other words, users like using it and, certain features and come back every day. That's kind of level one. Level two is, do you have an economic fit with them? In other words, is the value that you're providing them something they're willing to pay for at a cost that reflects the cost that you have to serve it to them? If I had a business where I said I'm going to give everyone a dollar every day, the users love it, but it's not going to work for me as a business. And I think that is where some founders haven't necessarily stress tested the willingness and the economics of their model, which I'm sure we're going to get into more. But I guess our question is always as investors, what happens if you need to adjust that? Have you actually run it through the mill and seen if you 2x prices, if you 10x prices, what happens to churn, what happens to retention, and so on?
As and when you do launch that startup that gives away $1 a day, please let me know.
Absolutely. Waitlist only.
Yeah. Shreman, from Granola's perspective, just defining our terms here, is there anything you'd want to add just on understanding when you've hit product market fit?
I think there's been like a few like standout moments. I think one has kind of been when we've just seen usage within like a certain company just explode, with us doing like, I wish we could take more credit, but like absolutely nothing to kind of, like focus on a certain company and see the adoption really grow. I think secondly, it's probably been around like sales when internal champions or users are really egging on their procurement team to get this tool as soon as possible. That's been pretty for me. Who's kind of been at Granola since the earliest days, but at other companies too. It's been really surprising that level of pull. And maybe the third and last one off the top of my head. There's been a few AWS outages over the past year that I'm pretty sure everyone on this call will remember. So I think I've seen just Twitter blow up a bit, at least when it wasn't down on Granola being down because of the AWS outages. There's something about that I think is like pretty special when you see that take shape in different forms.
Great, thank you. And if I could ask you, Shreman, I suppose one for the startups in the room, I want to ask about how startups think about tackle growth once product market fit has been achieved, and how do you do it in a sustainable way?
Yeah, I mean, I think even after PMF, at least how we think about it is, bottoms up adoption for us is still like the number one growth engine, without paying for, I guess, like further user acquisition or company signups. So really kind of thinking through how does a user, how does a company share, how do they grow organically, right? And the big bet, the big assumption is obviously at one point you do convert that usage into paying users, right? And that's what obviously keeps this whole cycle sustainable. So I think that by itself is the one thing we really obsess over. How do we make it easy for people to use the product? How do we make it dead simple for people to get value from it, right? And just try to keep that consistently, and all the other like further experiments around like monetization kind of keeps happening.
Great. Dan, would you add anything to that as far as keeping growth kind of sustainable once you've found your PMF?
I think that I probably would take it into a slightly different perspective. I think that kind of once you found that, growth kind of in a way seems to some extent obvious, right? Because like you just keep kind of adding customers effectively kind of at certain economics, it keeps paying back, et cetera, et cetera. I think the more fundamental question that you start kind of facing with, I think, is number one, what additional value can you kind of add on top to potentially kind of monetize or extract even more kind of usage or something from the customers. But I think increasingly more and more very soon is like, is what you found actually long-term sustainable? And I think that this is probably kind of the most interesting part of the conversation, kind of especially with all the AI kind of dynamic changes in the current world, because I think that things change so fast that I wonder if the definition of, oh, I found PMF hasn't actually changed yet, because like, yeah, okay, great. Maybe you found it kind of today, but like 2 months later, kind of your whole business effectively would be kind of just killed by simply one additional release of the kind of whatever OpenAI on Anthropic or X or kind of some of those. So I think that kind of more and more to me, the increasing importance becomes the question of like sustainability of this PMF that I guess we'll explore kind of more throughout the call today.
Yeah, definitely. I mean, I suppose I was wondering about the balance between, if you call them internal signals, so to speak, like what you're picking up from customers who are already using the product versus keeping that balance of what's going on in the world outside, right? As far as changes in AI, like what impact that's having on SaaS, etc. How do you bring user signals into product development?
Is that a question for me?
It was, Dan, sorry.
No, sure, no problem. No, probably kind of insights here. I think that you guided kind of primarily by two things. I think number one is kind of, it's something that we're highly driven by kind of as a business, and it's one of our kind of core principles as a company is kind of customer obsession. So like imagine that in every product conversation that you're having, that you have like a representative of the customer sitting around the table, and like how would they react if they kind of listen and hear to all the conversations you're having. I think that this is number one, to kind of try to bring the customer-centric perspective kind of into the business. And I think number two is just like regular product processes about kind of collecting the user feedback, kind of top down, bottom up. I think that we try to kind of, it's obvious to say everyone is doing that, kind of saying that. I think the kind of hard part is like how you actually operationalize that. But I think that that's where kind of some of the interesting things that we're, for example, doing kind of right now as we speak is, again, AI is a huge help here because, like, for example, you can kind of these days run much more kind of customer analysis, sentiment analysis, kind of record some of the conversations, then transcribe them with AI, understand kind of the negative, neutral, kind of positive sentiment of your customer base that they have to you. So kind of you can do much more tagging and real-time product feedback, kind of that loops back into kind of how you're building the product. I think this is some of the things that we're trying to adopt increasingly more kind of in the latest months.
Sure. And Shreman, if I can bring you back in as well, I suppose I wanted to ask how you kind of interpret user signals and feed those into your product development, but also how you think about engagement, customer retention. Obviously, I'm aware that Granola's kind of moved into enterprise, I think, within the last year or so. Correct me if I'm wrong.
Yep.
How do you balance these things?
Yeah, I'll take out the first bit around user signals to product development. I think it's really what Dan said, right? Like listening to customers, obsessing over that, but it's really how you operationalize that really can differ company to company and really determine how effective that is. I think at Granola, pretty much since the early days, I mean, before Granola was even publicly released, Sam and Chris, the founders, would be running around London in person, going to different offices of VC firms to have them test early pre-release versions of Granola. Like that's what they were doing for at least a couple of months. And I'm sure the folks at Dawn might be familiar with that too. I think present day Granola is still very similar. I think we're very big on user interviews. They're actually scheduled and shared to everyone on the team. Anyone can join them. We're big on in-person interviews as well. They play a very foundational role to, I guess, like how we think about the product development cycle. I think how that starts to operationalize, once certain things are like clear enough, like we're big on like just prototyping and iterating. So the Granola that the Granola employees have looks in some ways pretty different to the ones that you all might have. Like my one is always wonky. In some ways it's kind of like the worst one to demo because there's always something up or weird like with it. And how the team will kind of do this is just like dog food this internally, and at certain moments or points, just ask the team how they thought of X, Y, or Z. And if a lot of the team doesn't even know X existed, right? Or Y didn't really matter to them, we'll really take that on board and keep iterating. At a certain point, when we feel good with something, we typically have beta users or even a smaller group of, I don't know what we call them, pre-beta users, where we'll then dog food this to outside of the organization. Then it gets to beta. Then we have something called alpha, which is a larger user group before making a release to every Granola user. But even at that point, when it releases to every Granola user, we kind of wait before we make a wider public announcement just to see, who's even noticing this, who's even using this. So at every single point, what's happening are these user kind of calls and conversations.
Given that you guys transcribed all the conversations, what percentage of calls starts with discussing about comparability of different note-taking services?
Honestly, I think at the beginning, like a year ago, like quite a bit, I think now, especially the ones who are like on like alpha or beta, right? I guess are like more dedicated Granola users. So the conversation, I think over the past year has moved away from, what's company X or Y, like how their product is to, I guess, like ours. We're very grateful to those users.
Martin, can I ask a question at this point?
Absolutely. Yeah.
So I'm curious, like on the VC side, we spend a lot of time worrying about competition and moats and so on. How far are the founders on the call, like more running your own race and just saying, you know what, we just need to be the best one. We don't need to worry about, a theoretical comparison sheet versus, doing secret shopping or like keeping such a close eye on everyone else, which is what we, from a more analytical and worrying perspective, perhaps tend towards.
I'm happy to share kind of a view. I don't know, Shreman, if I mean it's kind of a bit of I think Pandora box, to be honest. So kind of not going there kind of much deeper. I think that to me, whenever kind of you're a founder or kind of whatever a team and building the business, and in a way, I think that kind of the business model potentially has an existential threat, meaning that like it's sort of like a binary with like, oh, additional release of like whatever some of the kind of models might potentially kind of scrap and eradicate your business in a way. To me personally, this is just the type of risk that I'm not willing to take at all to start with. And that's why I think that if you look about the kind of lots of different traditional kind of SaaS models, I think that this where kind of to me would be kind of step number one. Is it kind of long-term defensible at all? Yes or no? I understand that there are arguments about, oh, AI expands the kind of TAM. You can kind of potentially go deeper into automating the workflows, da. But like at the same time, some of the companies can start doing some of the things in-house completely and not kind of just buying the services at all. So do I want to bet kind of my next 10, 20 years on building something that might be kind of scrapped overnight? My personal answer is no. Again, some people might kind of think differently about it, but hence kind of I just wouldn't go into the kind of spaces where kind of it just has this existential risk, number one. Number two, whenever kind of it's into something that does have a strategic kind of long-term moat and understand why are they, network effects, brand, kind of some other things, then I think it's just about, yeah, obviously kind of how can you run fast? And then, yes, kind of how can you do some of the kind of, how can you make sure that kind of the level of service that you provide to the customers is indeed 10x better than that of your kind of competitors effectively. And then it's about, I think, regular mystery shopping with competitors.
Happy to add maybe a point or two. I think on competition's like a really interesting one. At least as far as like Granola is concerned, when we started off, we were just a note-taking app, and there were other note-taking apps that have been around for probably like at least 5+ years. That have been around. Some are part of like the core product experiences of, I guess, like video conferencing tools, like the one that we're using right now, right? So some are really like massive companies, and in some ways, if you think about that, that might even just like dissuade you from creating something in the first place, right? Competition was probably one of the things that I felt strongly about, like as a kind of factor to consider before joining Granola, right? But I think at the end of the day, how I think we've like thought about this, like once I've joined Granola internally, is to not really think about competition too much. There's only so much that we can do, right? And as long as we're looking at our metrics, we're hearing what users are saying, and we feel confident in what we can do, right? I think those are the things that really like keep us up at night versus like what people are doing outside those walls. Having said that, I mean, I think the elephant in the room really are like the large labs, right? So for a period of time when, OpenAI were launching all kinds of different stuff, right? Like a shopping product, enterprise search, right? You really don't know how like entire categories of apps are going to be like impacted, right? Because some of those companies really are operating at a different scale when it comes to the caliber of talent and like funding they're able to attract. We'll see. I think now we think about this a little bit more. Enterprise customers bring it up more in a way that we probably didn't have when it was very consumer and very like bottoms up. I think on the moat side, I think Dan said something earlier on, which I think really hit the nail on it for me. Like, I think when you're able to achieve PMF, you're really able to learn more about like what users want, like where you can add more value after the fact, right? So that starts to become more of like a durable moat for me, like a more deeper sense of what users want and being able to like build that continuously. I think secondly, maybe in this context well, not to be very meta, of context, right? I think with Granola, we think of like meeting notes as pretty important context for what a user like needs, what a user wants, what a user needs to do. And I think we're able to build a lot more like on top of that. And as we think about like other aspects of like work context, Slack, email, right? If you think about all the tools that you use, you're really able to, if you're able to, incorporate that as well, I think over the longer term, build a superior product experience for users. Right now, the foundation for us, at least, is like the meeting notes and the context that has.
Awesome. Thank you very much. And I encourage all panelists to ask one another questions and challenge each other on any points as they come along, because you're all coming from different perspectives with unique experiences. So if I can ask you a question, Henry, I suppose, what type of signals do investors look for when they're backing companies that look ready to scale, that say they've achieved a product market fit, but you need to be sure before you get involved?
I think Shreman covered some of these really well earlier. I love the point about outages and effectively not sort of what would happen. When we're doing customer calls to assess whether we want to invest in a company, one of the classic boilerplate questions is around NPS, right? And I hate when it's asked in the sense of, would you recommend this to anyone? But I much prefer, have you? And then people then think, oh, yes, I have actually. And similarly, taking it away by force or by an infrastructure collapse that wasn't your fault is again a like a real live test of how much pain people would feel if you didn't exist tomorrow, which is a question we'd love to be able to theoretically test, and that gives a real life instance of that. The second point I think is around, yes, this it's great in the first days to have founders running around and selling, but I think for that sort of scaling, we want to see that they can, someone else can take that same passion and distill it into something that can be communicated to other customers. And a lot of what the alpha customers, are buying is the exact team and the founders themselves. And so you've got to also understand, does the product stand on its own two legs when that's no longer scalable or possible? So it's more like if you can get to, well, the levels people are getting to now with just founder sales are incredibly impressive. But for us, when we're thinking about the next, 10x from there, we need to think about the GTM and the engine. And the last one is, we're always focused on winning deals, but I think it's also important for companies to understand why they lose when they lose, both in terms of the upfront and from a churn perspective. It's always possible to explain things away, and we get in our board packs, we get categorizations of, budget or M&A or customer champion left or something, but often there's something a bit deeper underneath them, and it's quite easy to just explain things away quickly. But the most obsessive companies we have in our portfolio will basically do exit interviews with every customer and really make sure that they gather that feedback so that it's not just, yeah, we have a win ratio of 70%, but it's more like every loss is felt as a learning experience and a pain. So I think those are the things that we look for in terms of organizational maturity and kind of mindset, getting the metrics themselves.
Sure. And at the risk of asking about a false dichotomy here, would you, in terms of thinking about trade-offs, would you rather back a company with slower growth and strong margins, or faster growth and questionable margins, volatile costs, etc.?
For me, I think it's really understanding if the margins are low, why are they low? Is that because you're not really charging people what it costs, and you're kind of then the VCs are just subsidizing growth that is going to evaporate as soon as you start boiling the frog, as it were? Or is it because you haven't bothered optimizing your AI stack, and you assume also that compute costs will just trend down? And if those things are part of your narrative for the future, that's more palatable. If it's we've already done all the optimizations with the AI pipeline and so on, but we were charging people $10 a month and we tried to make it 100 and everyone churned, but actually it costs us 90 to deliver this. So it just means that ultimately you need to do something to show users that there is the value. And I guess this is more Helen's department, but how to articulate the pricing and the ways to charge customers over time. So it's not quite a false dichotomy. I think it's just like understanding the level beneath about what the story behind the current status is, and if it's like a permanent situation or a waypoint on the journey to something more sustainable for you long term.
Sure. Helen, I'm conscious I haven't brought you into the conversation for a little bit. Would you, in terms of the companies that you work with, how would you
Yeah. No, I think that's what a lot of our users are also grappling with, is like how to build a pricing model that's sustainable, that brings you revenue, but also covers costs, and at the same time also aligning with how your customers actually see value. And also like can be simple enough to understand, right? Because I think in a lot of AI scenarios, like the underlying cost is so complex that it doesn't make sense to like surface all of that to customers. Um, I think like a general trend that I would comment on is I think pricing changes are definitely becoming more common. In the past, companies probably don't touch their pricing until a few years in, and there's generally like this kind of fear around changing pricing, afraid of like potential user blowback or like not having a good way to do clean tests. I think this has definitely shifted more in the AI era. the market is changing so fast, costs are always fluctuating, and products are coming into the market quicker than ever. So a lot of users are kind of just iterating as they learn about how users are actually getting value from their products and what actually works from them. Based on what we learned, we actually like plotted a framework on how to choose your pricing model on like the ease of adoption versus like revenue predictability. So like if you look at traditional SaaS models, there's a very regular recurring like flat fee per seat service subscription, but that becomes like a really big problem in terms of margins in the AI world because of all this cost. And so that's when people start to like layer on these usage-based elements. But then if you have a pure usage-based model, it also becomes an issue because then you run the risk of like not having a regular cash flow. You don't know when people are going to pay you. It's really hard for both the business and customers to forecast. So we see our users kind of balancing along these axes, playing with different pricing levers to really figure out what actually works for them as time goes. And if you look at this past year, there's like a lot of pretty high profile pricing changes, like Cursor adapted their pricing, Vercel switched their model, Lovable removed like seat-based limits in their plans and completely like redid their tiers. And so these are like, I would say like market leaders within this space are actually doing a lot of experimentation. And I don't think they're stopping anytime soon. I think this iteration is going to continue to come. And so I think it's a really fun conversation to be in right now because everyone's just kind of like figuring it out and trying to like find the right balance between that growth and like margin protection.
Helen, can I ask, do you think users are part of this conversation and are they getting more sophisticated, or is it like being led by the vendor side?
I think it's a partnership. Like speaking from a Stripe perspective, we offer the infrastructure to make all of this happen. So we talk to our users to understand like what are the edge cases that you're seeing, what are you prioritizing, and want to make sure that we are giving them the flexibility within the infrastructure to do these tests, to change their pricing model easily without taking away the engineering resources. When we look into the market, like I think a few things kind of stood out to me. One is like a lot of people are using credits as kind of a tool. It helps with like abstracting a lot of the value. It adds a little bit of like upfront predictability because it's a prepaid model while still having that usage-based element. And then I would say the other thing is like the market isn't necessarily converging towards like, oh, we're going back to subscriptions or we're going like pure usage based. It's kind of somewhere in the middle. So a hybrid model is definitely something that we see emerge a lot, just because once again, it goes back to like balancing kind of that predictability and ease of adoption. And I think everyone's like learning from each other. There's definitely, the market leaders are testing their models because they have the resources to do so. And then we see like other startups that might be earlier in their cycle kind of looking at what's similar to their business model and following suit.
Great. Thank you very much. Shreman, I wanted to ask, could you share some general tactics and approaches around driving adoption and continuing growth? I want to turn back to pricing specifically in a second, but I suppose just in terms of driving adoption and user acquisition, could you speak to how you have done that?
Yeah, I think during the early days, so a lot of 2024, definitely last year too, some core beliefs that I guess like the product in a lot of ways was the distribution. We did not pay for marketing like all of last year. So we had zero marketing spend. That's an easy number to remember. So a lot of this was really just driven by like, hey, can you get a person to use it? And if they will like it, how do we make it easy for them to share their granola notes? It sounds really dead simple, right? But like just the level of obsession. This is like several people's like full-time jobs here at Granola. Like just like thinking through a couple of those things. That has just been really, really important for us, just given the nature of our product, obviously. And I think that's like so I think this advice will only really be applicable for people who share similar like traits around this. We've had pilots that started off with maybe like 10, 20 users turn into 1,000+ user contracts, just solely based off this. I think if I had to think of last year, if there's anything outside the product that really helped, probably two things. I mean, one was Lenny's product pass. So Lenny Rachitsky is a Substack author that many of you probably know, who also does like a podcast. He launched this like product bundle. So this is really more of a biz dev kind of partnership, which was like if you paid for a year of Lenny's Substack subscription, you got access for a year free to like 5 products. We were one of 5. The other 4 were, I think, Linear, Perplexity, Superhuman, and Notion. Yeah, that definitely made stuff go nuts. So that was one probably outside the product when it came to like acquisition and adoption. The
How
second,
many usages did it bring? Do you track kind of there probably were individual codes or something? So like just curious what the numbers
yeah,
we're talking about, thousands, tens of thousands, like millions.
tens of tens of thousands, tens of thousands for us, and we're talking this is like Feb 2025, right? Where I don't know, like we probably like had very low numbers compared to what we did today, where that probably had that definitely was like significant for us back then. The second thing, and this is again early days, so pre, I guess, PMF, we had several people tweet about Granola. Like it sounds very, again, like basic, but I remember Guillermo from Vercel, the CEO and founder of Vercel, I think he tweeted about us once, and you could just see sign up numbers like bounce. And on the day it was huge, right? It was like massive to the point where like everyone was pretty much focused on like the stability of the app, right? Making sure it doesn't crash, but also like the week or so after. Um, it's more than just one person tweeting. You can have different people tweeting. Like even if you had one person with a large following tweet a month, like that just consistently led to like an uplift. I think the core behind it is like I guess like how do you build something worth tweeting about, right? Like we could not we paid $0 last year for marketing. We definitely probably couldn't afford whatever Guillermo would hypothetically charge for a paid sponsorship. So it really gets to the core of, I guess, like how do you build a product, like worth caring about and certainly worth tweeting about. And I think for that, Sam, who's a designer founder, and Chris, our product founder, deserve a tremendous amount of credit.
Wow. Okay, so more Substack and Twitter posts in the future. Dan, any general tactics, tips?
Yeah. I mean, I think that our case here is very different because like completely different perspective, right? So I think that we chatted about briefly. We're the representative of, I think, one of this like transforming the kind of the real sector of economy type kind of companies, where I think that we talk about the kind of enormous in size, but at the same time kind of quite labor intensive, kind of traditional, maybe kind of the type of the industry that hasn't seen changes for kind of long period of time, talking about letting agencies, but I think that that would apply to anything, whether it be like accounting firms or law firms or whatever, insurance mortgage brokers. And I think that this is an industry example where I think that for no particular reason, it's just because of like the way that industry is structured, because like it's a long tail of small moms and pops businesses kind of usually dominating this sort of service industries. There is effectively kind of plentiful of different operational processes for no particular reason. It's just like because different people want to run things and the workflows in a different way. And I think then whenever you're trying to kind of to effectively bring to this kind of customers, effectively one unified product that kind of aims to automate and improve the level of service of how you provide the kind of the end process and their workflow, you kind of quite often struggle to be able to kind of sell a product to them, because I think that this is examples of the industries where kind of customers not really looking to buy kind of yet another CRM. I think that kind of they would not change their operational processes for the sake of adopting your technology. I think that usually they approach it other way around. They would be looking for the technology that almost like plug and play fits on their existing kind of operational processes so that they can use it with like no hassle almost at all. And because the operational processes are so different, then I think building kind of a unified one product kind of turns out to be incredibly kind of difficult, simply for the fact that kind of to automate things, you need to kind of take certain kind of decision into how you want things to be run. And then when they don't want to change how things are run, then kind of you inherently kind of face a blocker of automation and an ability to do so. And I think that's exactly kind of one of the examples. I think I started with saying that there was no single VC conversation that didn't kind of go into the path of like, why don't you guys kind of sell software to these businesses? And I think the kind of the honest answer would be go and try to sit in different kind of estate agents, accounting firm, whatever, and then you'll feel on the fingertips just how different they are and how differently they run. And I think that's exactly why kind of rather than taking an approach of like trying to kind of sell technologies to them, I think that this is examples of the industries where kind of given how enormous they are in size and fragmented and other things, the approach of like potentially buying them out and then transforming them inside out, because then effectively you have an opportunity to almost like mandate adoption of the product, turns out to be kind of in a way easier to kind of achieve the end result rather than trying to kind of from the sidelines pitch it to them. So I think that's why kind of on one end, probably our point of view here is relevant because like effectively we decided kind of purposefully not to go and try to sell the product. But at the same time, like how to do that, I don't know, because we're not doing that eventually. But maybe this would be a perspective that would be helpful to some of the kind of participants, because maybe they face the same kind of issue when they try to kind of pitch the product, especially corporate or enterprise to their customers. Henry, I'm sure you'll have a perspective
Yeah,
on that.
I think what you're saying actually touches on a wider point at the moment, which is as traditional software industry has evolved really into more of the outcome and service wrapper around the software. And people have always wanted problems solved. And in the past, the only way that it could work from a economics perspective was buy a tool and do it. And now, many businesses that we're getting pitched are saying we're going full stack. We're not just going to be selling an interface to people. We're going to, take the fundamental piece of work to be done that the user has, and then just figure out what we can do in terms of moving laterally out from the landing point that a software only approach would have had. So I think what you're saying is also attaching to that. So in other words, what is it what the human and service elements, whether that's trust or whether that's papering around the edges where you do need human judgment or human intervention can bring, and then what's really the right overall operating model to deliver that. So I think that is a lot of what we're seeing, and it's also then flowing into how people regard their product market fit, how they regard their pricing, thinking, well, it would cost you this much to hire that many people to do the job, and I'll do it for overall this much. And I'll just take the problem away from you, and then you don't worry about what goes on in the kitchen. I'll just serve it up for you. I think that's a lot more what we're seeing the venture and SaaS world trying to evolve into with the current market and the technologies.
I think to add on top of that, there are two problems. One is like how to sell, but second is like you're absolutely right that like obviously there is some value and benefit that the technology can provide. The question is like how to kind of share the pie. And let's imagine that your technology can kind of bring whatever 20-30% EBITDA uplift in revenue. Historically, let's imagine that you were selling your software and no single business, I think, is willing to pay for the software more than 2-3% of their revenues, right? So kind of, yes, you can sell software and then get effectively kind of a tiny fraction of the value that you bring, close to 10% of those, leaving 90% on the table. Yes, you can try to kind of push the edge in this kind of gap from 2% that you can earn by kind of flat fee or per seat selling software to 20 that you can kind of effectively gain by earning the whole kind of outcome and everything. You can try to push it further by the kind of some outcome-based pricing and some other thing. But this is where kind of I think that economics stops working on your customer side. Because obviously for them to kind of to be able and to have a desire to change their processes, to break things, to adopt the kind of technology, then they need to kind of have some gain that is like more than just kind of whatever you can bring, right? So then kind of you need to meet somewhere in the middle probably, or even kind of maybe leave more than half of the value kind of to the customer. And that exactly kind of raises the question, okay, but then is this go-to-market model actually the most efficient then? If you kind of have to leave more than half of the kind of value creation, either on the table or to the customer to whom you're kind of trying to sell to. Open question, no answer there, but I think that industry by industry, different people taking different approach.
Yeah, and I think you mentioned accounting, for example, and law is another example where we're seeing two competing approaches which work differently for different market segments. So if you're an accounting firm and your target market is startups with all modern stack and no prior relationships and so on, they would hate the idea of a sort of email-based relationship with an old school services model. They would be just flabbergasted that it's not more automated from the outset. And then more traditional businesses, what they're really paying for is someone they can ring up, someone that they know is going to hold all the context in their head, someone that's going to basically be someone to shout at if things go wrong as well and pass liability on to. And that's you can't put that in software inherently. So I think it's really understanding what's the like subtext of why somebody wants this process done by an outsourced provider, and how do I deliver that for them in a way that kind of solves their need, which may not just be software.
Thank you, guys. We've had a question in the Q&A chat, which I'll read from Jade Cohen of Qualis Flow, who asks, what do you see as being the underlying reason for businesses moving to a more software plus service model versus pure SaaS? Don't know if anyone would like to jump on that.
I can take it then, if that's right. I think it's the fact that a lot of the economic pie had been left on the table. If you think about what SaaS has been solving, it's it's a significant thing. But when you start thinking about all the things that sit around software, that's where everyone's seeing a 10 or more times larger opportunity. And it's only since LLMs really that the potential to capture that in a way that has an economically scalable model through software really makes sense. So it's really just an opportunity that's only become available through technology. And everybody in the past, when they tried to build services plus software businesses, they got rejected by the venture capital community most often because it was saying, well, you're just going to have to scale your fixed, your cost base of employees in a linear way, and you're never going to get the operational leverage, which is the whole point of a SaaS business, where the marginal cost per additional user served tends to zero. And that's, I guess, what people are now seeing is the possibility with sort of AI-enabled services businesses. Not that it'll tend to zero, but that, especially as compute costs come down, it will be where you can get SaaS-like margins, so call it 70% plus rather than 20% for a traditional services business.
Great, thank you. I want to turn to pricing more specifically in a second, but before we do, Helen, there's a question in all of this around the kind of defensibility of moats and how AI is changing everything at the moment. How do you see that with the companies that you work with and how they're thinking about product market fit?
I think we talked about this in our previous conversation preparing for this panel. I think a lot of them are still figuring it out. I don't know if the founders on this or the folks on this call feel the same. But it's not really the sentiment that I get is that like it's not really a binary thing. It's not like you reach it one day and then you have it forever, or you just like don't have it. It kind of evolves over time, and as the market shifts, as the customer preferences change, as competitors enter, they're kind of refining and deepening all of this product market fit instead of just finding it once. So like I said, because we're collecting and like metering all of this usage data for our customers, like a lot of them really turns to us for like the analytics or reporting to understand like actual user behaviors, like not just what they say, but actually what they do in order to like continuously like refine what that PMF looks like.
Great, thank you. And with that in mind, I suppose the market is changing quicker than ever. I'm wondering, how does pricing catch up with that? How do you make decisions around pricing, and how do you validate the approach is right? Maybe Shreman, I know that Granola has hardly changed price or hardly changed price in your history. Is that right?
Yeah, that's correct. We have kept the same pricing. We used to have three different paid plans. Now we have two. Enterprise and our business plan, which is more for like our basic, I guess, paid plan for teams, smaller teams. And then I think our enterprise pricing, it used to be like, like kind of custom. It used to be like talk to us, and we just disclose like pricing and have made it self-serve. Yeah, I could go into why, but there's not too much there apart from just like very fast-growing startup. And pricing is one of those things that I think, if done right, can be like a huge lever, right? But for a company that's just achieving PMF or has recently, it just simply isn't, I guess, like a hair on fire problem quite yet.
I'm going to reveal my ignorance and say, hair on fire problem? Is that just when you got to do something very quickly because your hair's on fire?
Yeah, it's kind of like reacting to something. So I think for us, like where I think which is adjacent to pricing is I guess like, will people pay for granola? What we kind of had last year was for our most like active users and for those that use granola here since early last year or even 2024, you might have known or felt that we never really asked you to pay. Right? If you were an active user of granola. So really, if anything, like when we kind of pricing, at least how we think about it was, I guess, a subset of like broader monetization, right? So I guess that big question was rather like, will people pay, right? And like, what is the best way to surface that? What is the best way to kind of story tell, showcase like our value beyond just seeing who's active and like who's not. So I think for us, if we go back to the hair on fire analogy that I mentioned, right? That's probably where a lot of our thinking and mind space has gone into rather than like trying to like really focus on a specific digit or digits, which would be our pricing.
Sure. If I could bring Danny, I suppose, how do you align pricing to user value and how do you capture user feedback so you can make better pricing decisions?
Yeah, so I think that back to the kind of, I think our rather go-to-market decisions, a bit less relevant question at this current point of time, because that's exactly why we made the decision to go full stack and kind of own the whole business, effectively buy them out and then transform them inside out, effectively. So hence kind of, we don't price it per se because we kind of extract all the benefit of the technology kind of ourselves fully. However, I think that what might be relevant is that we more and more increasingly kind of think about the kind of sort of kind of different people call it differently, but like in a way sort of this like business in a box type business model where effectively it's in a way like reverse franchising. So kind of you effectively sell your operating platform where it's not just like technology, but it's effectively technology plus human in the loop. And then effectively, I think that for the existing incumbent businesses, the way to think about it is rather like outsourcing. So like rather than kind of run the kind of operational activity in-house, why don't they just like outsource it? And then the guys would kind of run the full end-to-end workflow for me much more efficiently. And then we share the kind of the upside somehow between kind of ourselves and between the kind of the owner of the business effectively. So kind of the pitch to them is rather kind of work half, earn double, and like take less stress kind of what you do. And I think that's something that we're increasingly more and more kind of pitching to the kind of to, in our case, kind of agency owners. And I think that we do see kind of quite a good kind of pick-up rate there. But I think that that's effectively kind of trying to, in a way, stretch, I think, the boundaries of value extraction to the maximum, where I think they're trying to go to the kind of the, in a way, success-based or the kind of end result outcome as much as possible. Because I think that's the only way that we see it's possible to kind of extract maximum efficiency. Because I think that the more we still keep them kind of allowing to do the current operational processes in a variety of different ways, the less there is the amount of like automation and value extraction that we can do. So I think in our case, it's just the only way to achieve the maximum value really is to go and integrate as deeply as we can. And I think that we're big ambassadors of this approach.
Sure. Helen, I think Stripe's data has shown there's a greater move towards hybrid pricing, kind of some combination of flat fees with variable usage charges. Are you seeing founders kind of factor pricing flexibility in from day one, or do they tend to add it in later? How does that work?
Yeah, I do think it's becoming more top of mind amongst the users that we talk to. And I think the commonality is tying all of this together is just like how fast everything is moving. Like people are building out their mode, they're iterating, they're launching new features all the time. And in doing so, you can't really have monetization be a bottleneck. Like you don't want to say, oh, I can't price this thing or set up my billing, and therefore I need to delay this launch for a certain period of time. It's just like not a good scenario. And so in that sense, like this idea of pricing flexibility or like billing flexibility becomes really important. So now people are thinking about things like, okay, is my infrastructure allowing me to like add new products and rates into my product catalog really quickly? When we talked to Lovable, they came to us with requirements like a month with a month of time, and we kind of like implemented everything for them within like 2 weeks. And so like that's kind of the speed that we're operating at. companies change pricing a lot more now than before. We did a study, like that same study that you cite the stat from, where we surveyed around like 2,000 global businesses. We found that the fastest growing businesses, like the highest cohort that's growing over 100% year over year, they're 3 times more likely to report having changed their pricing, like over 3 times in the last 2 years, right? So like that's a lot of iteration. So how long does that take you? And every time you're making these pricing changes, is that taking engineering resources away from your core product development and work on, your billing and pricing instead? And like if that's the case, that's really not ideal. And so that's what a lot of users come to us for. And I think at the core, it's about how flexible you can be and how quickly you can change and iterate and adapt. One of our key examples kind of is 11 Labs. So I think people like they're a voice agent company. They scaled from like 100 million to 300 million ARR year over year. And to scale that fast, it's about building for that scale day one. So they actually built on Stripe billing and they have one engineer to manage their whole billing stack. And so for a company of that size and to operate in such a nimble way and like not take away your end resources away from your product development, I think that's like a very big part in allowing for that scale. And it's something that their head of finance has posted about as well. So like I think companies are thinking more about like what this flexibility means in terms of iteration. It plays a role into how quickly they can scale, how quickly they can expand globally, and in all of like the revenue operations that comes with going to market really quickly. And like as you grow at such rapid pace, like what does that actually mean to stay compliant and so on? These are all considerations that people are front loading a lot more than in previous times.
Great. Thank you.
Helen, we're in this phase where you said people are experimenting with how to price. Do you see that it'll cascade into like a few core models that get adopted, or do you think there'll be a huge variability across the ecosystem of vendors?
I think there's going to be some variability. Hybrid model, like Martin has referenced, like definitely comes up front. Like in that same survey that I referenced, I think around like more than the majority, around 56% of AI companies that we survey are using a hybrid approach. So like a combination of like subscriptions, usage-based elements, like in different flavors, right? And I think around 60% who haven't adopted says that they want to go towards that direction. And so I think that's like a clear trend of where the market is heading versus more traditional models like flat fee per seat subscriptions is sitting at around like the 20% range still. And so that those are kind of like the signals that we're hearing. Yeah.
Yeah. So you're saying my job's going to get a lot harder because I don't know what ARR means next year. I'll have to figure out what it is. Okay. Yeah. I'm sure you can publish a blog post perhaps telling us what hybrid ARR is or something. That would be very helpful.
Good to know. I'll note that down.
Looking forward to more hybrid ARR in the future. I appreciate that we're running up close to time. We've had a couple more questions in the box. I apologize if I don't get to yours. This may be a good one to begin to wrap up on. At the moment, do you feel that software companies are chasing the AI tail, trying to find how to fit AI into their offerings? And do you see software startups eventually using AI as their starting focal point, building around it? Not necessarily an easy one to digest in 2.5 minutes between 4 of you, but if anyone wants to chip in on that before I'm seeing some nodding, possibly from Dan.
Again, I'm not super close to that, right? I think Henry is much closer because I guess that he receives at least around 1,000 pitch decks every single day, if not more. So kind of maybe less by the smile I see. But kind of I think that I see it by what has happened. When was that? 2 weeks ago, right? When I think another release of whatever that was, that they kind of effectively kind of written then proof kind of checked effectively QA and then kind of the pull requested kind of code by itself. And then you see the whole SaaS market collapse by 30-40%. I think that's the kind of where we're going conversation. Your HubSpots and Salesforce and everyone of the world trying to kind of expand the AI adoption to try to kind of go deeper into kind of automating more workflows of the kind of underlying customers that they serve. At the same time, a lot of kind of AI native companies, I think, going after the same kind of markets themselves. Who's going to win? $1 billion question or what $1 trillion question, right? That was the market crash 2 weeks ago. No one knows. But my short answer would be, from what I see, 100% yes.
Great, thank you. I appreciate we are very close to the end. So I've got one final question, a couple of questions for everyone, quick fire. What's one piece of advice you would share with founders trying to find the right PMF right now? Alternatively, what's one metric that a post-PMF founder should obsess over? If everyone wants to take turn answering both or one of those.
I'll start and then I'll let the experts speak. Be very user-centric, listen to your users. That's like a commonality that I see across all of like the leading companies that we work with, and it's something that we care a lot about at Stripe as well. Like even now at the company, we have user conversations on a weekly basis, like company-wide. I think that's what has like helped us inform a lot on like what's working with the product and what's not. And same with the users that we work with that are doing very well in the market.
Happy to go next. One piece of advice. I think for us, it's like before you're considering to ship anything new, we're definitely asking ourselves more and more, what features can we kill? And I think the core of that is like, we want Granola to be a dead simple app to use. And, post PMF, there's so many things you can kind of add, right? So we're being more and more intentional about like not cluttering and I guess like taking away from like the core value add that Granola brought to our set of users.
Great, Henry.
For me, I'm going to come back to the boring finance answer, which is really just understand like what value you're delivering, how much people are willing to pay for it. It doesn't need to be optimized today, but just be really clear if you're a nice to have, or if AWS goes down, they start tearing their hair out, whether it's on fire or just or not. But I think that's core.
And Dan.
Nothing to add.
Nothing to add. Great. Thank you very much. Thank you very much for everyone who has tuned in. I think you will have received a poll so that we can find out what you thought of this talk. Thank you very much for joining. And please head on to sifted.eu/talks where you'll be able to see all the events that we've got coming up. Thank you very much for your time, everyone, and see you soon.
Thank you all.
Thank you.